What's going on, everybody? Welcome back to another video. So in this one, we have some explosive catalysts coming up this week. This week is probably one of the most important weeks of the year going into the end of it. We have earnings season. We have a crazy amount of economic data coming out this week that we are going to break down in full. We have all of this information laid out for you guys, and I'm going to break it down in a way simple, easy to understand, to make sure that you guys are set up in the best way possible to fully take advantage of all of these crazy market movements that are going to be coming over the next few weeks. So again, guys, before we get into all of that information, if you do enjoy the information and analysis that I provide for you guys in these videos, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. If you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post new videos. So getting into the charts right here, let's take a look at the SPY on the daily time frame. So currently, we are seeing this test of that 48 EMA on this daily time frame. Now, the one thing that I really want to bring to your guys' attention is, one, we are seeing building momentum with the MACD here, RSI above 50. The ADX is losing some of that momentum on the downtrend here, but on the 4-hour time frame, we're looking at something pretty interesting. We are coming up for this 200 EMA test, sitting right around 380.84, and going back to that daily time frame there, you are sitting just above that previous supply zone that we are starting to see some buyers stepping up to try and push us a little bit higher. Now, again, we could see upside, maybe potentially to some of these ranges up here, this 388. If earnings are good, which we are going to talk about in a little bit here too, we could see the market bounce up even more. But again, what we have to realize here is that we are not out of the woods yet, and this is a week to go risk off. Do not try and be a hero. These overnight swings, we are going to see a lot of volatility. The intraday movements are where a lot of people are going to be making this money with a pretty high degree of safety. Now, holding overnight, that's going to be a completely different story. Now, if you guys do want to learn how to do this and follow us every single day with the live streams, the predictive algorithms, the proprietary algorithms too, Trader Joe, Pythagoras, Invictus, all of the alerts, the best place to come and learn how to trade, make sure you guys check out that link down below. We have a lot of awesome things coming for you guys, and you do not want to miss out. But continuing on here, we are seeing the market starting to trend up into the end of the day here. The dollar hasn't necessarily made a relatively big move today. It's up about 0.08% here. The dollar's maintained its relative non-volatility. But when we come over here and take a look at the 10-year, again, we did see a little bit of volatility this morning here. We saw the pretty aggressive sell-off in the yields, and then they started to bounce back up here. Again, watch TLT. Watch these 10-year treasury bonds. I've said this a bunch of times. There is going to be a play on TLT in the future. It hasn't showed the signs of it happening yet. Right now, I'm just using TLT in the 10 years as more of a barometer for where markets could go intraday. But there is a lot of potential here. Now, again, when we talk about the gilts here, the 30-year gilt over in the UK, it's their equivalent of their essentially treasury bonds. We are going to be seeing the UK selling their bonds starting in the beginning of November. Now, what does that do to these yields? Well, it really pushes them to the upside. If we do not see other buyers step up and start to buy these bonds from the Bank of England as they start to sell them, then we're most likely going to see another pretty aggressive rip up here. Now, earnings season. This is the biggest week of earnings here. Now, here's why. When we take a look at the calendar, today is nothing too crazy here. We have Logitech, Discover. Again, Discover, these credit card companies, are going to give us a good understanding of, well, are people really stepping up their usage of credit right now? And that can give us an understanding of if inflation is actually becoming entrenched. What I mean by this is when you look back at what Powell was saying at his Jackson Hole Symposium speech, he was talking about a situation similar to when Volcker was the chair of the Fed. If people are continuously buying goods right now across the board, it means that they think that those goods aren't going to come down in price later. If they did think that those goods were going to come down in price later, they would forego the opportunity to buy them now and wait until those goods were cheaper later down the road. Now, these are going to be more goods that are more discretionary in nature that you don't need every single day, so not necessities. But seeing how these credit card companies are going to come out and say, okay, This is how we are seeing the behavior of consumers is going to be critically important. And then tomorrow before open, UPS, GM, Coca-Cola. After close, Microsoft, Google, Visa, Chipotle, Spotify, Texas Instruments. Wednesday, Boeing, Waste Management, Harley Davidson, Wingstop. Wednesday, Facebook, Ford, Teladoc. And again, I'm not going to call it Meta. If you guys have been around for a long enough period of time, I'm not going to call Facebook Meta yet. But looking down a little bit further, Thursday, Shopify, McDonald's, Caterpillar, Southwest, another credit card company, MasterCard. Then Thursday's crazy. After close, Apple, Amazon, Intel, Pinterest. Now, again, you guys could just look at this chart for yourself and say, yeah, it's going to be a crazy week. We do have earnings. You can typically see a lot more volatility. But this is what people aren't necessarily looking at right now that you need to be, and I need you guys to understand this here too. So this came out this morning. U.S. PMIs, essentially the Purchasing Managers Index, plunged into contraction in early October. New orders weakest since the pandemic lockdowns. Following September's surprise rebound, analysts expected U.S. preliminary October PMIs to be mixed this morning, with manufacturing slowing while services tick slightly higher, but they were very wrong. Both U.S. manufacturing and services surveys showed significant decline in early October, both tumbling into contraction. U.S. manufacturing, 49.9 contraction. U.S. services, 46.6 contraction. So again, the economy is not in a great spot here. And when we're going into that rate hike coming in over the next few weeks here, well, refreshing this page here, again, we have a 99.7% probability of a 75 basis point rate hike coming. And this is where things start to get interesting here. Looking at the economic data that we have coming out this week, everybody's focusing on earnings, but the sleeper is what the economic data is going to say here. So Tuesday, nothing too crazy. Consumer confidence index. Wednesday, new home sales, going to be very important to get an indication of how the housing market is faring right now. But Thursday's when things start to get interesting. We have the first estimate for Q3 GDP. If that comes out negative, that's going to be a very, very bad sign. Thursday is going to be very, very important with the GDP numbers coming out. Jobs report, initial claims, continuing claims. Friday, even more crazy. Employment cost index. We get all the PCE data, real disposable income, real consumer spending, which is going to tie into that credit card company thesis that we have right now. Definitely look towards those credit card companies for their earnings to give an indication of consumer spending and consumer sentiment across the board. And then we also get pending home sales index as well. So as you can see by all of this data here, it's a week to go a little bit risk off. It's going to be crazy. We have earnings left and right. We have crazy elements of economic data coming out that are going to be market moving. The name of the game this week is protect yourselves. Take those gains quick. Again, if you saw that stop loss video that we were talking about a lot on the streams, the private ones, the public ones, that stop loss video is going to set yourselves up for success. A lot of people have been using it in our group. The results have been pretty great, along with all the other results with the algorithms. Make sure you guys check out that video and give that a watch. Incorporate that into your trading strategy. It is very powerful. But again, do not try and be a hero. There was a lot of crazy things happening this week. We are going to see a lot of volatility. If you can avoid it, try not to take too many unnecessary risks. The last thing that I want to leave you guys with as we are going into earnings season, in my opinion, the thing that I'm going to be watching for the most is margin. So if you start to see the margins, the gross margins of these companies here stay relatively the same, well, then you know that the costs are then getting passed down to the consumers. If the margins are shrinking, then the companies themselves are going to be starting to eat some of those costs of production. That is another key economic indicator that we need to look for going forward in terms of a trend of, are these companies passing their costs down onto the consumers? Or are they going to be eating it themselves? And that's going to give us an indication of PCE or CPI data, which one is really going to be the driving factor and what the Fed's going to be looking at going into the next couple of months. So guys, that is going to wrap up this video here. If you did enjoy the information and analysis that I provided for you guys in this one, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So hopefully you guys are having a great evening, are excited for the week ahead. I'll see you guys in the next one. Peace.